Hello everyone, I Kanchan Shete. First of all, I welcome you all my dear students of MCOM second year on the platform of KTHM e-learning. Today we are going to start and learn the second chapter of specialized auditing paper 6, that is internal audit. In the earlier session we have discussed the first chapter, that is audit under GST law or tax laws. In that we have seen the different forms of tax audit under section 44AB of Income Tax Act 1961. After that we have introduced with the GST law and talked about the steps to be taken by auditor in audit under GST law. And lastly we have also understand the GST audit procedure. Now in this lecture we are going to study the introduction, meaning and definitions of internal audit. After that we will see the nature of internal audit, and further we will study the scope of internal audit. Now let us start with the introduction of internal audit. Friends, internal audit is a dynamic profession involved in helping organizations achieve their objectives. It is concerned with evaluating and improving the effectiveness of risk management, control and governance processes in an organization. The role of internal audit is to provide independent assurance that an organization's risk management, governance and internal control processes are operating effectively. Traditionally, internal auditing has been viewed as confined merely to ensure that the accounting and allied records have been properly maintained, that the assets of the enterprise have been properly safeguarded, and that the policies and procedures laid down by the management have been compiled with. Now, let us see the actual meaning of internal audit. Friends, internal audit is the verification of operations within the business by specially assigned teams. It is an important managerial device to assess the correctness of business records on a continuous basis in an organization. It assists the management to improve an organization's performance by furnishing them with objective analysis, appraisals, recommendations and pertinent comments concerning the activities reviewed. Internal audit adds value through improving the internal control and monitoring environment within organization, detect fraud. It means internal auditing is an indoor appraisal activity for the review of accounting, financial and other operations as a basis of service to management. It is undertaken within the organization and is normally done by specially assigned internal staff. It should, however, operate independent of all the internal checks in force. Internal auditing frequently involves measuring compliance with the entity's policies and procedures. Internal auditors, however, are not responsible for the execution of company activities. They can merely advise the management and board of directors regarding how to better execute their responsibilities. Internal audit is an independent or important tool in the hands of management to evaluate the correctness of accounting records on a continuous basis in an organization. Friends, all publicly traded corporations typically have an internal audit unit led by general manager or a chief internal auditor who generally reports to the audit committee of the board of directors, with administrative reporting to the chief executive officer. Researches support that organization with an internal audit functions are more likely to detect and report fraud than those who do not. Now let us see the definitions of internal audit. There are two definitions are given. First is according to Howard F. Stetler. Internal auditing is an independent appraisal activity within an organization for the review of operations as a service to management. According to the Institute of Internal Auditors, internal auditing is an independent, objective assurance and consulting activity designed to add value and improve an organization's operation. It helps an agency accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes. Now, let us see the nature of internal audit. There are some points are given of nature of internal audit can be explained with the help of these points. First is part of internal control. Internal audit is part of internal control operated by management. It is an independent appraisal activity within an organization performed by an employee of the organization or an outside agency. It seeks to review accounting, financial and other operations as a basis for service to the organization. It is a managerial control to measure and evaluate the effectiveness of the other controls. Second nature of internal audit is critical appraisal of functioning. Friends, internal audit is a critical appraisal of functioning of various operations of an enterprise, including the functioning of the system of internal check. Exceptions from normal functioning of internal check system are exposed in the internal audit. Second or third is activities. Friends, accuracy, completeness, reliability and timeliness of accounting information are tested and reported for remedial action. Non-accounting areas wise operational side of enterprise are critically studied, analyzed and weakness of the system are brought to the notice of the management. Suggestions for increasing the effectiveness of the system, for improving the productivity and profitability of business practices are offered in the activities. Then fourth is continuous audit. Internal audit is undertaken continuously, that is throughout the year. It means in the whole year. It is a kind of continuous audit but conducted by the staff of the concerned organization. That is why it is continuous audit. Then last is not compulsory or mandatory. Friends, the internal audit is not made compulsory or mandatory under any status. However, it is desirable to have internal audit in India. Internal audit has assumed special significance with the introduction of manufacturing and other companies order to 1988. It has been suppressed by the companies order 2003. According to the orders, in case of specified companies, the statutory auditor is required to report whether the internal audit system of the company commensurate with the size and nature of the business of the company. Now, let's see the scope of internal audit. As per SA 610, using the work of an internal auditor, the objectives of internal audit functions vary widely and depend on the size and structure of the entity and the requirements of the management, and where applicable, those charged with governance. Areas of internal audit may include one or more of some following points. First is review of internal control system and procedure. In that, the internal auditor should determine whether the internal control system is in a consonance with the organizational structure. As far as possible, controls should be inbuilt in the operating functions. If they are to be cost effective, for example, the establishment of separate credit control department would not be justified if the objective of reducing credit risk and minimizing debt recovery period could be made through control inbuilt in the accounting and sales system, especially in smaller and medium-sized concern. Each control should be reviewed and analyzed in terms of its cost and benefits. It should also be seen whether the internal controls were in use throughout the period of intended reliance. A breakdown in internal controls for a specific portion of intended reliance would need special attention. Second is review of custodianship and safeguarding of assets. Friends, the internal auditor should review the control system to ensure that all assets are accounted for fully. He should review the means used for safeguarding assets against losses, for example, fire, improper or negligent activity, theft, and illegal acts, etc. He should review the control system for intangible assets, for example, the procedures relating to credit control, where an enterprise uses electronic data processing equipment, the physical and systems control on processing facilities as well as on data storage should be examined and tested. Fire should review the adequacy of the insurance cover for the various risks involved. An internal auditor should also verify the existence of the asset. Third one is review of compliance with policies, procedures and regulations. Friends, it is essential that the various functional segments or departments of an enterprise comply with the relevant policies, plans, procedures, laws and regulations so that the operations are carried out in coordinated manner. The internal auditor should examine whether the management has a system by which its policies, plans and procedures are communicated to all concerned. He should examine whether management formulates the major accounting policies after due regard to their effect on the financial statement, both present and future. He should also examine the system of periodical review of existing policies, particularly when there is a change in the method and nature of operations of the enterprise. By combining the results of his review or of the internal auditor's review of the adequacy of the systems with the result of his compliance test, the internal auditor should be able to evaluate the effectiveness of the former. He should point out specific weaknesses and suggest remedial action. Next comes is review of relevance and reliability of information. The internal auditor should review the information system to evaluate the reliability and integrity of financial and operating information given to management and to external agencies such as governmental bodies, trade organizations and labor unions. For the purpose, the internal auditor should review the means used for measuring, classifying and reporting information, including the records from which the information is extracted. He should examine the accuracy and reliability of financial and operational records. He should also review the frequency and timeliness of reports, keeping in view the statutory time limits in the case of reports to governmental agencies. Internal auditor should examine whether the information contained in the reports is meaningful to the users. The usefulness of the reports as well as of the records should be evaluated with the reference to their cost. The internal auditor should also examine whether the reporting is by exception, that is, the reports highlight the significant and distinctive features. Next comes is review of the organizational structure. The internal audit should conduct an appraisal of the organizational structure to ascertain whether it is in harmony with the objectives of the enterprise and whether the assignment of responsibilities is in consciousness therewith. For the purpose, he should review the manner in which the activities of the enterprise are grouped for managerial control. It is also important to review whether the responsibility and authority are in harmony with the grouping pattern. The internal auditor should examine the organization chart to find out whether the structure is simple and economical and that no function enjoys an undue dominance over the others. Internal auditors see whether the lines of authority and responsibility are clearly defined and communicated to all the organizational levels. He should particularly see that the responsibilities of managerial staff at headquarters do not overlap with those of chief executives at operating units. The situation often results in organizational confusion. He should examine whether there is a satisfactory balance between authority and responsibility of important executive. That is, the authority of each executive should be commensurate with the responsibility assigned to him. Next is review of utilization of resources. The internal auditor should check whether proper operating standards and norms have been established for measuring economical and efficient use of resources. They should be detailed enough to be identifiable with specific operating responsibilities and should be capable of being used by operating personnel for monitoring and evaluating their performance. The internal auditor should review the methods of establishment, the operating standards and norms. He should carefully examine the assumptions made while setting the standards to ensure that they are appropriate and necessary. And last point of scope of internal audit is review of accomplishment of goals and objectives. Friends, the internal auditor should also review the overall objectives of the enterprise to evaluate whether they are clearly stated and are attainable. The translation of such overall objectives into specific objectives for each department and program should be reviewed. It should be examined whether the objectives are revised periodically in the light of changes in internal and external environment. The internal auditor should examine whether the extent possible objectives are expressed in precise quantifiable terms to facilitate detailed planning to be made for achieving them. Budgeting forms an important part of such planning. Line managers who are to implement the plans should fully participate in framing them. This will ensure that plans anticipate the problem areas. There should also be sufficient flexibility in the plans to permit such improvements in their implementation as would benefit the enterprises as a whole. Now, here we stop this lecture. Thank you.